Okay, this is Brian Stoll for Timing Strategies, Wednesday, October 24th. Well, if anybody's watching what went on intraday, we had a real neat kind of range where we gapped down. I was looking for a little different setup, and this just demonstrates the futility, at least on my part. Some people can get it better than I can, obviously. I was looking for, like I mentioned yesterday, a gap open lower like we got, but from that point I was looking for a takeout of the highs of yesterday's bar today, somewhere up into that range, which we didn't get. Instead, we got a wash of that day's lows and then a trade back up. So that still maintains the same potential setup that I was looking for yesterday for tomorrow, Thursday the 25th. Or other scenario that we could see is a gap and run. That's not it. Gotta stay away. Take that price magnet off. So the other situation we could get tomorrow is a gap up higher, and then from the gap a run. Either way, I'm still looking bullish on the spiders and on the major indices. And again, if we get that gap lower tomorrow and it takes out that high that we're looking at right in here for today's high, we definitely want to be long above there. And again, this is the third day above our main regression line, right at that level. I mean, it keeps changing, but at basically 150.45, as long as we maintain a close above that, and if we can get a close above today's high and yesterday's high as well in that type of scenario, we're looking for that target of about 153.5 all the way up to as high as 155 in that range. If we get that, again, our end of day systems with Ridex will be taking a profit. Remember, we mentioned on Friday we did get long about 60%, exactly 60%. We also bought the oils here on Monday, and we bought oils on Monday to add to that position for a total long exposure of 70%. That's doing real well. We got to close above the 21 bar today. Again, we're looking for a trade somewhere back up into this range if we can get it. 196 to 200. We're closing above that 191 level, so again, that's a strong indication that we still have a little more room to the upside. Longer term, I'm bearish. Bottom line, I'm looking for not the oils, but bottom line, I'm looking for on the spiders. And this is just guesswork, but intuition, been doing this long enough to know that the bullishness needs to be worked off. Longer term, I'm looking for a move that's going to take this market again back up into this range, somewhere at the 53.5, 55 level, and then if we come back down below that 154.5 level, I'm actually looking for a wash somewhere back down below to retest somewhere in this area, the 141 to 145 level on the spiders, to retest that August 16th low, which we haven't gotten yet. Now, are we going to get that before the end of the year? I don't know. Are we going to get it at all? I don't know, but it's kind of what I'm looking for, but that's a day-by-day thing. Another interesting setup is the banking sector, the BKX. That's the biggest participant or sector of the entire market, and again, it's the banking system. So when the banking system ain't happening, nothing else happens for the stock market generally. I'll tell you about that if you're interested. Send me an email. So we've got a long setup here. We spiked that low of August 16th all the way back down. So anticipate looking for, in my opinion, a short cover. Whoops, that's not the button I'm looking for. Anticipate looking for a short covering in some of these banking stocks, these basic turds that just keep telling you that's the worst of it, and then it gets even worse next week, which is now this week. Looking at the IYR, anything that we get on a trade above today's high at about anything above 75.50, look for a move back up into the range somewhere to the 76, 77.5 level at that point. Same thing looking for the XLF. If we can get a move back up above today's high Look for a short covering rally that should take us back up into that 34, 34.50, maybe even as high as 35, just to bust all the trend followers out of their trend following systems. Break that 50-day moving average, trade back up in there, and then maybe roll over. So if we do get a move back up into that level, I'm going to be more than likely looking to get short. And another situation we have right now that I'm seeing is in the Qs on the NASDAQ. The amount of comeback that we saw in the end of the day was impressive, yet a little better move would have saw the Qs take out that high of yesterday. We didn't get that. What I'm seeing here again, as I keep repeating for the last 12-13 days from this on the 5th of September, or 5th of October, excuse me, 13-14 days of churn, heavy volume, no direction. We could get a move a little bit higher from today. If we take out the highs of today, looking for maybe 54.5, basically right around that level, 54.5, maybe as high as 55, 54.5, 55, right in that level. And if we do get that, and it can't keep going, but then comes back down below this high that we broke below today again, at about 53.95, 54, if we close back below there again, sell those Qs, get rid of the NASDAQ because that's profit taking. My opinion, what we're seeing potentially here is a setup where the profits in the technology sector are going to start being taken. They're not going to be getting short. They're just going to be liquidating longs, whoever they are, the institutions, and redeploying that money back into the financial sectors, which are all beaten up, and they're trying to maintain that this is the worst, so it can't get any worse, and it'll get worse. But the spread that is on right now, sell financials, buy technology, I think is going to unwind a little bit on a short cover rally in the financials and a liquidation on the long side of the technology sector with the Qs. So if that's correct, we know what to do. Also looking for, and again, I'm just not feeling it here with the tech, that this kind of move that we saw today back up did not give us a break to new highs, which if tech was really, really on its game and things were there, we would have closed. We should have at least busted the highs of today, if not hopefully or potentially closed above it. Looking at the oil sector, again, oil, that's the gorilla. But I'm of the opinion, I'm the mild deflation camp. We got an interest rate meeting coming up on the 30th, 31st. See what happens. Pretty much we might test the range going back up above there tomorrow. If we can keep going higher, that'll give us 3 consecutive higher highs with higher lows. Back up into this range somewhere around the 198 to potential 200 level on the OIH. If we get that point, and if we get on the spiders, that trade again up to 153.5, all maybe as high as 155, we'll be taking half of our position off of our long position in the Ridex end of day system. But we bought the OIH, the oil sectors in the Ridex funds on Monday, so that's looking real nice as well. Other than that, we got the end of the month with the interest rates coming, so that will pretty much, after the day or two after that, so call it November 2nd, 3rd or so, we might get a shift back down or a change in direction, and we'll keep you posted day by day from there. Please feel free to check out our website, timingstrategies.com. Give me an email, any questions or feedback, appreciate it, and have a good night.